Hello everyone, Greg here from Master Trader. The markets did it again. They came back from another bearish situation, shaking off the potential to drop after the FANG stocks got hit last week, and some of them are already starting to come back. We'll see if to what extent they can. But let's just take a look at the broader markets here, and then we'll take a look at a few of the stocks for this chart of the week. So S&P spiders here, gapping down this morning into the lower part of the range here of that day, that whipsaw day where prices broke to the upside, they broke to the downside, basically closed in the middle. And one of the things that I spoke about with subscribers in our monthly get-together was the fact is, looking at these charts and looking at the trend, and while the candlesticks give us a great advantage visually as interpreting the price action, sometimes they add a little bit, maybe too much in a sense, in that when there's this noise or uncertainty within the markets, as we have a lot tails and a lot of opens and closes that are the same, and these whippy overlapping bars and so on. So first thing is to just recognize that the trend in this case is up, and the benefit is with the trend, because that's where the power is. And the day-to-day gyrations at times can be very meaningful, and other times it's just noise. So one of the ways to kind of filter the noise is just look at this from a point of view of just looking at the closing prices. Of course, we could change this to just the closing prices, but if you were to just look at them, just visually, and just look at what's happened here. Sideways. Right? Just sideways. And down, and now we've recovered. So the S&Ps are just in a, forming a little range here within an uptrend, which is bullish. Another way to look at this, interpret it, is that it's a correction through time versus a pullback. Right? So this was a sharp pullback. Pretty unusual to have this kind of a pullback in a V bottom and go back up, but in this market is a bit unusual, to say the least. So we've got this correction through time going on. We've got this gap down here, and so we look for this to, normally we look for a situation where prices are consolidating like this to continue the uptrend and break out to the upside. And we'll see if that happens. Of course, it could go sideways and eventually break down, but that has to be proven by prices actually breaking to the downside, breaking some support. And then, of course, we just take it from there as the trend begins to change. Now, what happened here in the Nasdaq, where all of the damage was caused in those FANG stocks and the semiconductors and some software stocks, is we're now beginning to build a new area of support here right above the rising 50 MA. Prices broke down and closed down below the 20, so that's a start. However, the support in this case is down here. That's your major support level that establishes the trend. Now, what we also look at is retracements, and I'm not talking about just Fibonacci retracements, because that's along the lines of Holy Grail, in my opinion, hocus pocus types of analysis. Just common sense, visually looking at this and saying, hey, here was a nice big move. This pullback here was relatively shallow, even though it came down quite sharp. It wasn't that deep. We had a nice big move. And now this pullback again is sharp and a bit deeper. Right? Whether it's at some fib level, I really don't care. I can see that the level of retracement here is relatively deep. However, it held above this major support level. Now it's beginning to build a new reference point of support, and we've got two bottoming tail bars right here, closing above their opening prices, green, which suggests an attempt, at least an attempt, to move higher tomorrow morning. It's the only way to interpret that. It's really simple, in that prices came down, as I said, hard, deep retracement, sharp angle, somewhat bearish, of course, and now it's beginning to repair that damage with 2 bottoming tail bars, and we'll see if this follows through tomorrow, as this suggests. That's what the candle suggests, and we'll see if it actually follows through. Now we've got, the Dow in its own world, right? No big whippy bars, no big down bars, and what we have here, looking at it from a bigger point of view, is the uptrend, a correction, move up, a pullback, and then a continuation. No big red bars, no big whippy tail bars, just an uptrend. And the assumption is it continues until it stops. Okay? Now, the internet stocks, let's just look at that index. So here's where, the big damage was done. And, we look at now the depth of this retracement. And while it held, just barely held there as it came down to that major support level in the 50 MA, buyers stepped up again. Now, they're beginning to hold here. Can they continue to? Well, we'll see. We'll see what tomorrow brings. Right now, based on this move lower, we would say the trend is somewhat in doubt because of the depth of retracement. Right? And we don't need any fancy measurement tools. We just eyeball it. Yeah, it came down about 90%. So typically that doesn't happen within an uptrend. You get time corrections, right? You get moves up and shallow pullbacks. They typically don't look like this. Those pullbacks in an uptrend are, more like that. That's your normal type of very smooth type of, advancing trend rather than falling from the sky, and back up again, fall from the sky, and now it's repairing the damage. And we'll see, tomorrow's Friday, we'll see how far this gets going, and of course into next week. So looking at a couple of the, the leaders there, it's like, okay, is this move in Amazon over? It got through the 1,000 level, almost to 1,020, and came down real hard, and now, beginning to repair the damage again at the 50 MA, widely followed moving average on a daily time frame. And so that's why I use the 20, the 50, and here's the 200 down here. NVIDIA, retype that. Again, one of the widely followed institutional stocks that many of the funds are into right now. Had that move up after that long correction, the gap in the go, and we were looking for it to pull back, but it didn't, and it had this continuation pattern, and it too came down real hard, but beginning to repair the damage. All of this is bullish, which we have this type of day, which gets all of us thinking bearishly. If that's the norm. However, does it actually violate the trend, or can a bar like this be ignored? Well, if it can, there's nothing more bullish than that within an uptrend to have a big bearish bar being ignored. Okay? So, that being said, we'll see what the markets bring here tomorrow, if they follow through to the upside, or whether we just get more choppy sideways action and so on. So, you want more information like this in our recommendations, I'll put a link in to this video. You can subscribe to our letter, 21 days for $1, and check out the day-to-day recommendations and reviews that we do. Happy trading, everyone.